Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore. Hey Vishnu, thanks again for coming on the show.
My pleasure as always, Brian.
Now Vishnu, before we get your insights, let's take a look across the region and see how markets have been performing this morning. We'll start closer to home in the SGX. It's at 3,101.87. It's down 0.12%. Bursa Malaysia is at 1,618.97. It's down 0.31%. Across the region, we've got a sea of red. The Nikkei is down 0.15% at 29,876.98. Shanghai Composite is down 0.31 at 3,435.96. The Hang Seng is at 29,000.18. It's down 0.09%. ASX 200 is down 0.55% at 6,789.5. And rounding off, we've got the Kospi, which is also down 1.16% at 3,031.59. Vishnu, what's the reason for the sea of red this morning?
Hi, Brian. Yes, that's a good question. And it also begs us what markets are thinking about. And this is and markets, as always, are quite fickle. Today, I think probably it's some positioning ahead of the FOMC meeting. We have had a little bit of a lift much earlier in the coming week, in the previous weeks. And so ahead of the FOMC meeting, I think markets are getting a little bit more circumspect. And the irony around it is part of the good news could also be bad news, because if the US Federal Reserve were to up their economic projections and make it more positive, as well as if they did the same for the dot plot, then markets could start fretting that they could revoke or start easing or taking away policy easing sooner than they might like. So that was the irony of it. Of course, we also have a backdrop of uncertainty over China policy, as well as the uncertainty over vaccines and whether there's going to be a delay in rollouts due to side effects, so on and so forth. Those things are legitimate reasons to pause and reflect as well.
Okay, but what is your view? There's a view out of, for example, the Commonwealth Bank of Australia that if Jerome Powell and the policy statement is not dovish enough, you're going to see a spike in bond yields and the dollar. Do you subscribe to that view?
I do subscribe to the view that markets are looking desperately for a more concrete guidance on yields. And here's why. Because there is an obvious disconnect between improving US economic outlook, in fact, rather stellar economic outlook, given the $1.9 trillion fiscal package, with now US estimates in the ballpark of 6% rebound, if not more. There's a disconnect between that and keeping your foot on the pedal in terms of a lot of easing, which is why we have seen long-term US interest rates continuing to go higher on the optimism about recovery. But it has gone a little too high. And now the question is how Jerome Powell can balance between saying, yes, the outlook is better, but no, we are going to keep the same policy accommodation in place. And most importantly, say at what levels of yields, or without giving very, very precise numbers, at least suggest that yields will not be allowed to rise as far as they're willing to go, given his previous statement that so far the yield rise seems to reflect optimism. So markets are quite nervous about that.
But Vishnu, one of the things is the markets have bought into this synchronized global recovery story, but it's not all hunky-dory. After all, if you look at Europe, there's been sputtering of vaccine rollouts, rollbacks, and so forth in terms of lockdowns. That's not a baked-in deal, is it? The global recovery story.
Yeah, you make a very good point. And in fact, I wanted to emphasize that point. Markets are quite upbeat about the prospects that 2021 will certainly be much better than 2020. And in fact, we'll see a sizable rebound in growth. But I think they are beginning to come to a realization that asynchronous is the word, not synchronized. Mm-hmm. Necessarily, the US is going to lead the way, to a certain extent, China too. But this increasing divergence between the US outlook and the European outlook, particularly given the vaccine rollouts perhaps being delayed or interrupted, would mean that you could get somewhat more unexpected outcome. So initially, where a fairly soft and accommodative dollar was anticipated, you could get a stronger dollar based on these differentials. But the bottom line here is that the vaccine interruption so far, they may delay, but they're not going to derail the recovery that's anticipated. So it's just a matter of the timing of things and the amplitude of the recovery.
Now, moving on to the Australian dollar. Now, the RBA has to juggle a couple of different things. Now, it's got a spillover of the US dollar treasury yield surge on one hand. The other hand, a reflation-related strength in the Aussie dollar. On the other hand as well, you've got, your hands are a little bit tied because you've got interest rates at historical lows in Australia. So what's your view on the dollar, Aussie dollar?
For the Aussie dollar, okay, so by and large, we think the Aussie dollar would be A, fairly buoyant this year, and B, it's more likely than not to outperform the other G8 or G10 currencies as well as Asian currencies on the back of the reflation-driven demand recovery, just because of the exposure to the commodities as well as how well they can come out with the vaccines and the travel bubbles, so on and so forth. So that's for the Aussie dollar. And if you just backtrack this a little bit, I think you hit the nail on the head, which is to say the RBA may not be in a bind in terms of keeping its yields down and trying to dampen the Aussie dollar, because these are fairly aligned objectives. You need to keep your policy accommodative. But as you rightly point out, with a recovery and most worryingly with the frothy housing market, that's where they can't push that envelope further. And in all likelihood, it's just how they manage expectations, which is why we think at the end of it, the net effect may be looking past the US dollar volatility, the Australian dollar should come up fairly supported, and more important, it should be a slight outperformer.
Now, what are the key data points and events we should be looking out for the rest of the week, besides obviously the second half of the FOMC meeting?
Right. I mean, after the FOMC meeting, of course, there's going to be a lot of digesting going on, so on and so forth. People will also be interested to, I think, pick apart what the details of the US-China talks were. And I think that could be something that they want to focus on to see what the US-China risks look like as they pan out. And apart from that, I think it's really a wind down, and people will be ignoring a bit of the US data because of the kind of weather and storm-related disruptions coming through. So at this point, I think data takes a slight backseat.
Now, Vishnu, as always, thank you very much for coming on the show.
My pleasure. Thank you.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.